Okay, let's just jump right in. We're going to tackle the one topic that's on every investor's mind right now: AI. Is this a revolutionary boom, or are we staring down the barrel of a bubble that's about to pop? Let's break it down. I mean, you've seen the headlines, right? You've felt the hype. You've watched those stock prices just go vertical. It all leads to this one huge question we've all got to ask. Is this for real? Is this growth sustainable, or are we just watching a massive bubble inflate right before our eyes?
Ever since ChatGPT burst onto the scene in late 2022, it feels like AI has been this rocket fuel strapped to the market, pushing it to historic highs. But, with that kind of incredible climb, there's always that nagging fear. What if it all comes crashing down?
So, to really get a grip on what's going on, we first have to appreciate the sheer scale of this thing. This isn't just a little bit of hype. People are calling this a full-blown AI gold rush. And if you want to understand the scale of a gold rush, you just have to follow the money. And wow, the numbers here are just staggering. Check this out. The big tech giants, we're talking Microsoft, Amazon, Google's parent Alphabet, Meta, they're on track to spend a collective $300 billion on AI infrastructure. And that's just for 2025 alone. And it's not slowing down. That spending, it's already up a whopping 50% from the year before. And forecasts are projecting it's going to blow past $400 billion in 2026. Seriously, this isn't just a trickle of investment. It is an absolute fire hose of cash. This kind of crazy enthusiasm, it feels kind of familiar, doesn't it? It has these echoes of other tech manias we've seen in the past. So let's take a step back and look at a really crucial lesson from history, because these things often follow a pattern. Okay, so before we dive deeper, let's get on the same page. What even is a bubble? It's not just when prices shoot up really fast. A real bubble is when those prices get totally disconnected from reality, from the actual fundamental value of an asset, based on what it can earn over the long term. And historically, these bubbles tend to follow a pretty predictable 5-stage playbook. It always starts with some cool new innovation, right, that gets people excited. Then that excitement builds into total euphoria. That FOMO, the fear of missing out, kicks in, and everyone piles on. But then the smart money starts cashing out. Cracks appear. And before you know it, it all spirals into panic. And if you want a perfect example, look no further than the dot-com era. We saw this exact pattern play out. The NASDAQ just soared for 5 years straight. It more than doubled in the last year alone. And then, boom, it came crashing down, losing 78% of its value. Wiped out. All those gains from the bubble years, gone. And a huge part of what defined that era was this motto: get big fast. It was all about growth over profits. The whole game was to get as many eyeballs on your website as you could, as fast as you could. You had companies burning through millions of dollars of VC money on wild parties and Super Bowl ads, all before they had a single clue about how to actually make money. Okay, so with that history lesson in mind, let's turn our attention back to today. What are the warning signs? What are the tea leaves telling us that has so many analysts and investors worried about an AI bubble right now? Well, analysts are definitely pointing to some red flags that feel very familiar. First, you've got these soaring market indexes. But more importantly, there's this really high concentration. A huge chunk of the market's value is tied up in just a handful of companies. And that's risky, right? Because if one of those giants stumbles, it can pull the whole market down. On top of that, valuations are just really high. Things like the PE ratio, which is basically what you're paying for a dollar of profit, are way above the historical average. Put it all together and, yeah, it's making people nervous. And this quote from a user on Reddit kind of sums up the feeling perfectly. The numbers might be a little simplified, but the core idea is spot on. There's this massive concern that the cost to actually run these incredible AI models is huge, while the money they're bringing in right now, well, it might not be enough to back it all up. It feels a lot like the dot-com problem, doesn't it?
But okay, hold on. It's really tempting to just say, yup, this is the dot-com bubble 2.0, but that would be way too simple. There are some really fundamental differences this time around that we absolutely have to consider.
And maybe the biggest difference is who is driving this thing. Remember, the dot-com bubble was all about these tiny startups, many with zero profits, sometimes not even any revenue. Today, the AI boom is being led by the biggest, most profitable, most cash-rich companies the world has ever seen.
And another thing, AI isn't some abstract idea for the future. Millions of us are already using it every single day. Plus, back in the 90s, you had to go out and buy a whole new computer just to get online. Today, The supercomputer you need to access AI is already sitting right in your pocket. The whole distribution network is already there. So, you see? We got really strong arguments on both sides of the coin, which brings us to the real takeaway here. With all this complexity, what's the smartest way for us to think about this whole AI market right now?
And honestly, I think this quote from the investment firm Forsyth Barr just hits the nail on the head. Trying to frame this as a simple bubble or no bubble debate, it's just not helpful. The reality is way more complicated. This isn't a time for panic, but it's definitely not a time for complacency either.
Look, trying to perfectly time the market to predict the exact top is a fool's game. Even the experts can't do it. So a smart investor shifts their focus. You stop trying to predict and you start preparing. It's all about building a strategy that can handle the bumps in the road, not one that depends on you having a crystal ball.
So what does that look like? It means going back to basics, sticking to those timeless investment principles, even when everyone is screaming about AI. Look for companies with actual sustainable earnings. Find ones that have a clear plan for how they're actually going to make money from AI. Diversify. Don't put all your eggs in one basket. And most importantly, always, always keep your own long-term goals in mind. At the end of the day, AI is almost certainly going to redefine our economy. There's very little doubt about that. But, and this is a big but, a world-changing technology does not guarantee a smooth ride for investors. The path forward is going to be bumpy. There will be incredible highs, but there will also be periods of doubt and painful corrections. And so that really leaves us with one final thought to reframe this whole thing. Forget asking, is this a bubble? That's not the right question. The real question, the one every single one of us should be asking, is much more personal and way more powerful. Am I prepared?